The Forex market is one of the most volatile financial markets out there. And while volatility can bring big opportunities, it can also bring just as much risk. So today, let's dive into the best technical analysis strategies for trading high-volatility Forex pairs. If you trade pairs like pound sterling to Japanese yen, euro/NZD, or XAU/USD, you're going to want to stick around for this. Now, before we get into strategies, it's important to understand what makes a pair volatile. Typically, these are pairs with lower liquidity or economic drivers that are constantly changing. This means sharp moves, fake outs, and big price swings are all part of the game. So we need technical tools that adapt fast and strategies that are built for speed and accuracy. One of the most reliable approaches for high volatility pairs is using support and resistance zones. These levels are where price reacts the most, and in volatile markets, price often accelerates when it breaks through key zones. You can spot these zones using previous highs and lows, or better yet, dynamic indicators like pivot points or Fibonacci levels. But here's the catch. Volatility often leads to false breakouts. So the trick is waiting for confirmation. This is where candlestick patterns like engulfing candles or pin bars come into play. On a strong breakout, you want to see a follow-through candle that closes beyond the zone. That's your signal that momentum is behind the move. Now, another solid strategy is trend following. When a volatile pair catches a trend, it can move hundreds of pips in a short time. The key is to ride that wave without getting thrown off. Tools like moving averages or trend lines are commonly used, but they often lag or repaint. That's why traders are leaning into smarter tools like trend scanners that give you real-time trend shifts. A good example of this is the Apex trend indicator. What makes it so effective is that it doesn't just draw pretty lines. It gives you non-repainting buy and sell signals and adapts to multiple time frames. If you're trading something like pound sterling to Japanese yen on the M15 chart, this can be a game changer. You can actually see the trend switch when the line turns blue or orange, and it even gives you precise entry and exit points with up to 3 take-profit levels and a stop-loss. And speaking of time frames, this is another big factor. With high-volatility pairs, lower time frames can be tricky. Noise, whipsaws, and sudden spikes are more common. That's why many traders prefer sticking to M15 and above. It gives you a clearer picture without the chaotic noise of the 1-minute or 5-minute charts. Now let's talk about momentum indicators. Tools like RSI and MACD can work well in volatile environments, especially when paired with divergence analysis. If price is making higher highs, but the RSI is making lower highs, that's a red flag. Same goes for the opposite. Combine this with price action, and you've got a powerful confirmation tool. Another gem is the average true range, or ATR. This is a volatility-based indicator that shows you how much a pair typically moves. You can use it to set your stop loss and take profit levels so they actually reflect current market conditions. In fact, tools like the Apex trend indicator use ATR to dynamically adjust your TP and SL, which is a massive help when volatility gets out of control. Let's not forget news events. High-impact news can cause 100-pip moves in minutes. Always check the economic calendar before you trade, and avoid entering new positions right before major announcements unless you're a seasoned news trader. Better yet, wait for the news to pass, then use technicals to catch the move after the dust settles. If you're trading volatile pairs, discipline is your best friend. Stick to your strategy, always use a stop loss, and never risk more than you're comfortable losing. Tools can help, but your mindset and consistency are what keep you in the game long-term. Trading high-volatility pairs isn't about avoiding risk, it's about managing it. And with the right technical strategies and tools, you can turn wild price swings into calculated profits. The Apex trend indicator is one of those tools that helps you simplify the chaos, giving you clean, smart, and reliable signals that actually adapt to the market's rhythm. If you're serious about Forex and want to master high-volatility pairs, combining solid strategies with smart tools like Apex is a no-brainer. For more tips, tutorials, and trading insights, hit that subscribe button. This is FX Limit, and we'll see you in the next video.